the Chennai Technical Center, the administration block, which will be ready by the middle of this year. So it's a huge leg up for Royal Enfield in our entire product development, and the fact that we have 10 different offices all over Chennai since we've grown so much over the last decade, we'll be able to consolidate everyone in one location. We've had a very important period of transition of our motorcycles to anti-lock braking. That was mandated by regulation, and approximately 85% of our portfolio is already on anti-lock braking system, which also includes in most cases a rear disc brake. So that's an enormous transition that we've been able to do ahead of the regulation. Of course, that's also increased our cost and therefore our price to customers a lot. And that was also part of the issue we had, was a 10-15% maybe higher cost increase on some models. But people are getting used to that now. We've also taken, therefore, because of that and other reasons, we've had to take additional price hike of around 1,400 rupees across models approximately, except for the twins, which were just recently launched. And of course, the last quarter was also one of the milestones, was the resolution of our strike, which we had in Oragadam, which lasted 50 days. It was resolved amicably in November. We lost production of nearly 30,000 motors.
Okay, so that is Siddharth Lal detailing some of the events that took place in the quarter. Stock is off the lows. It fell almost 2%. Then there was some buying that returned. So some volatility on Eicher Motors. Numbers are absolutely in line this quarter. Mayuresh Joshi of Angel Broking is joining in. Mayuresh, let me ask you this question. Would you buy Eicher now, looking at the numbers?
Afternoon, Surabhi. I think we're still holding on to the stock in our portfolio. I think the risks that have got flagged off because of various issues, maybe input cost inflation to begin with, the higher ownership costs, product-related launch costs, and what you've probably seen in terms of the transition to the new regulatory norms. I think that is what has hit the stock hard in terms of their operating performance. And if one really expects that the margins can hover around this range, I think there will be a gradual improvement in volumes over a period of time. So as the reset in volumes happens, as the CEO was mentioning at this point of time, I think the automatic leverage on the balance sheet Stuttgart playing out. On the commercial part of the business, what you're probably seeing in terms of demand getting hampered because of axle load norms. I think you might see normalization happen and pre-buying happen as well as BS6 norms kick in over the next year and a half. So to that bit again, I think the discounting factor and moving toward higher tonnage vehicles is something that is going to affect that numbers as well. So again, I think the higher insurance costs and the other issues probably played plague. The street will be keenly watching out for the monthly numbers coming through over the next few months, and that is where the entire reset will happen in terms of normalization of the entire traction that the stock has delivered in terms of numbers over the past so many quarters, except the last two, because of both the strike and otherwise. So yes, I think the numbers should normalize. The valuations have come off, and as I said, I think the longer-term outlook, in my opinion, at least looks bright. So I think we are holding on to the stock in our portfolios.
Okay, holding on to the stock. It's interesting once again. 27,250 on the Nifty Bank. Actually, before we wrap up, I just wanted your thoughts on this buying that's coming back into HDFC Bank, but it's coming at the cost of ICICI, SBI, even Axis to a certain extent. Any thoughts here?
Well, I've heard it's ETF buying, and HDFC Bank went up to the 200-day moving average at 2050. From there, it's reversed sharply. Now 2150, 2160 is key level. This 10,850, if it doesn't get breached and the market starts to turn sharply, then maybe the first time the market failed, got everybody long, then short. So that's something people should keep in view. But HDFC Bank certainly looks like it will not let the Bank Nifty fall too much.
Okay, minute and a half to go. So let's start winding down this day. It seems that the close is going to be below 10,900. So, Anuj, considering that this intraday rally really didn't go anywhere, didn't last, how do you sum up the day?
We've been making this comparison, right, Surabhi, between the Nifty and the mid-cap index and the divergence. Today, the divergence would have gone up even more because the Nifty is down 0.4%, but the mid-cap index is going home with what? 1.64% cards. So, I think make the divergence almost about 9 point I think 1% thereabout between Nifty and the mid-cap index. And this is after last year's 17% divergence between Nifty and mid-cap index. So the broader market is really collapsing here because it's just continuing with that decline of last year. Anyway, in terms of index, it was down 40 points, but as I said, perhaps down but not out. Let's start with the losers because it was a down day. Dr. Reddy's down 5.5%. Mahindra and Mahindra, after that guidance cut, down 4.5%. ONGC was down 4%. The big pressure though came from Reliance, that was down 2%. SBI, that was down 2% as well. Larsen and Tubro, which was down about 1.3%. And ICICI Bank, which was down about 1%. On the gaining side, you had Tata Steel, which was up 2%. IOC was higher. Tata Motors was higher. IndusInd Bank. And of course, big heavyweights like ITC, HDFC Bank, Maruti to a certain extent also helping the boost today.
On the mid-cap side, as we've been saying ad nauseum, the weakness is just continuing. I mean, look at the numbers today. Apollo Hospitals, 10-11% gone. Graphite India, I mean, this stock is just moving circuit down now, 10% lower on it. We've seen lots of weakness in Nalco on the back of numbers. And there's something like Kajaria Ceramics, Jet Airways, ICICI Pru, DHFL, First Source. So much of weakness in a lot of these stocks and, you know, they're not exactly small stocks also. If we talk about the flip side on what worked on the mid-cap screen, not too many names to speak of. You can count in a Sun TV, which has reacted very well to the numbers. Strong quarter from the company, 10% up on that one stock. Dilip Buildcon, Balakrishna Industries, these are some of the other names that saw buying. Today, Mindtree was interesting. It is a news-driven stock. Everyone's wondering when this stake sale happens. So let's see what comes through. 3% up on that stock as well. And Meghmani Organics from the broader market was an interesting one. Again, it's a numbers reaction, 13% up on that stock as we were closing out. Let's take final thoughts with our guests as well. So Ashwini, given the weak trend, what would you look at doing? Does it make sense to look at a short trade on the index?
See, basically, if we are range bound and because we defended big averages, it could be possible that we are back in this range of 10,850 to about 11,150, 300-point range. Even if this is a pullback rally, that level, 50% level is about 10,980 to about 11,000. But overall, there does not seem to be great pressure on the downside. So at best, we can chop around. The moment we get past, say, 10,950, 960, you will see some sort of lightening up. I mean, if you see 10,850, you will probably see some amount of buying, but not enough to get past 11,000. And for the day, not enough to get past 10,850. Maybe if the globe starts to rally, we could see some momentum here also.
Globe has its own set of problems, I guess. The trade issues between US and China being among them. But Mitesh, your thoughts and whether you would look at selling this market tomorrow as well?
See, we are selling, but we're not aggressively selling. So there are two reasons for that. One, we have failed the breakout on the upside. So that's kind of taken out the long positions. But we don't have a breakdown on indicators. We don't have very aggressive sell signals on the chart structure as well. So I think it could be a mild downward push, 10,850, maybe 750. I think that should be it. So for the time being, trading with mild negative bias, trying to sell on bounces and looking at weak stocks where intraday charts are giving some kind of sell signals, slightly more biased towards the negative side.
Okay, Mayuresh, this is the market where you're finding lots of stocks at good valuations, plenty of correction, but you have to have that gumption and the conviction to go and buy. Any names that come to your mind?
No, so Surabhi, I think we still continue our positive stance on gold financing companies. I think in a very staggered way at declines. I think the logic remains very, very clear. Their balance sheet strength probably still stays intact in spite of the NBFC crisis that we've seen. The numbers are very, very encouraging. The recent RBI policy in terms of the risk weights assigned also give a very positive connotation to how the risks are looked at for gold financing companies by the lenders. And the third element obviously is their capital adequacy, which remains strong, and asset quality pressures which are coming off. So I think they remain a very, very interesting sector to probably look at. And the other element also stays within the paper stocks. Yes, I think there have been a lot of talk in terms of imports of Chinese paper, pulp prices coming down, and that is what is putting additional pressure in terms of how realizations will pan out. But I think with very minimal capacity additions happening on the domestic front and the expectations of raw material increases not being so evident, you're probably going to see the e-tailing business along with their other businesses, including packaging board, and the realizations on printing or colored paper actually moving a tad bit higher, which should probably support the overall balance sheet strength. So I think it's a medium to long-term story, but I think this sector, in my opinion, it should also drive a reasonable amount of earnings growth and return on investment for investors who probably get parked in for a reasonable length of time.
Okay, all right, gentlemen, we'll wrap it up on that note. Thanks very much. Let's see what the market brings tomorrow. For today, it's of course been a down day.